Nothing in the world can take the place of persistence. Talent will not. Nothing is more common than unsuccessful men with talent. Genius will not. Unrewarded genius is almost a proverb. Education will not. The world is full of educated derelicts. Persistence and determination alone are omnipotent. The slogan, "Press on," has solved and always will solve the problems of the human race. Calvin Coolidge. My friends, we press on here every single day. 10 to 15 minutes is all we ask. Listen to us. Fill out those daily market worksheets 4 days a week, the weekly market worksheet after the Friday show, and your trade worksheets when you do your practice trades. If you want to supercharge your trading, get our book. If you understand the whole concept of what we do here, follow the link in the show notes. And of course, subscribe for free. We have a great training for our subscribers for free. You do that at chartingwealth.com. The training today, every indicator can fail. And there is so much packed into that training. If you haven't taken it before, and most of you haven't, please take it. Please listen to it. Take notes on it. Understand the concepts that we discuss here every day that are so important. And that is understanding the need to simplify. And we have simplified. In fact, I was talking to one of my accelerated market mastery students. We just finished up that 3-month course. Now we have the 3 months of follow-up where everybody's going to start putting together and practice trading their personal wealth funds. And in fact, one thing that one of the students brought up that was so key, they told me that what I love about what you teach here and what has worked so well for me is the fact that you keep it simple. So many times people have so many indicators, so many things that have to go right that never do, that you can never make a decision. You have analysis paralysis. We get away from that. Simple weekly vertical crossovers are our #1 determinant of when we get into our practice trades. Now, let's jump into the markets. We see the S&P 500 and the Q's down. That's the Nasdaq 100. We see 20-year bonds, almost said 21-year, 20-year bonds up, and we see gold up. So let's jump first into the S&P 500, down about 0.53%. We see the price percent oscillator, that all-important indicator. That is our main indicator, heading down, derivative oscillator gaining downward momentum. What does our candle look like for the week? Well, we see that it is a green up candle, a very small one. There's a wick on top. It's sitting right there on the weekly trend line. So we will just continue to watch, see what there is to see there. Price percent oscillator is heading down. Look at the 2-day. It's still heading down. Now, we do have a strong up 2-day candle that is forming. That is, again, the previous candle ended on Monday. It represented Friday of last week and Monday of this week. The latest candle, first day of this latest 2-day candle, is a green up candle. Price percent oscillator still heading down. Derivative oscillator losing downward momentum. And of course, that all-important price percent oscillator still negative. We see the half-day chart where things really peaked yesterday and then sort of slid sideways and down a little bit for the day. But that price percent oscillator, again, on the smallest of our 3 waves, the half-day, the 2-day, and the weekly, the strongest being the weekly. All things being equal, the market tends to move in the direction of the weekly chart, which is down. So we see the price percent oscillator gaining upward momentum, derivative oscillator, well, the price percent oscillator heading up, derivative oscillator gaining upward momentum, but the weekly chart on the price percent oscillator and the derivative oscillator still heading down, as is the 2-day. So we're continuing to watch. Remember, you still have in effect your profit and loss bands, which you set before you get into any trade. And in fact, I put it in yesterday's training, I think, but I'm going to put it in today's. I'm going to make myself a written note right now. At the end of this video, you will see a link to the profit and loss band video. I want you guys to have that. If you don't know what I'm talking about, it's another thing we've developed so that you're able to make sure that you list from the time you jump into any trade. Well, actually before you list your profit areas that you're hoping to hit and also your loss areas where you pull the trade. Remember, the most important thing you do always is minimize losses. Losses will kill you. Profits, of course, won't. They will make you soar. So let's now move from the S&P 500 to the Nasdaq 100. What do we see there? See a green up candle forming for the week. Price percent oscillator still heading down. Derivative oscillator heading down. That's, again, we're 2 days in. It was down 0.45% for the day. What do we see on the 2-day chart? Just about flat on the price percent oscillator. Derivative oscillator losing downward momentum going into our second up candle. A big green up candle is forming. Now, again, I know it was down for the day. I'm talking about what our average pace Heikin Ashi candlesticks are showing us. If you haven't taken our Heikin Ashi candlestick training, I'm going to put that at the end of today's video too, so that you'll have that. So I want you to take that also so you understand what we're talking about on those Heikin Ashi candlesticks, but you can see where we've blown through that weekly trend line also. Now, we'll continue to watch and see. What do we see on the half-day chart? Again, we see where things topped in the morning on Tuesday, pulled back some in the afternoon. Also saw a loss in the up movement of the price percent oscillator, but that derivative oscillator still streaming up. So again, all of our signals are to be watched. You're to act on your profit and loss bands. Pay attention. Again, if this market does turn around, you want to be ready, willing, and able to jump back into it. But don't forget, the price percent oscillator still is the heavyweight. It's still heading down. 2-day chart is flat, maybe heading down just a little bit, but pretty much flat, and still negative on both the derivative oscillator and the price percent oscillator. So watch those. Remember, those weekly vertical crossovers have worked so well for us this year. Just because they worked in the past doesn't mean they'll always work, but again, they've worked very well for us. Not a single one on the S&P 500 and the Qs this year, not a single one of those crossovers have failed us. So again, let's keep moving through these charts. What do we see with bonds? Well, bonds were up for the day 0.12%, which is what we would expect them to do. If stocks are down, we have a green up candle that's forming ever so slightly. Derivative oscillator still heading down. Still negative, losing downward momentum. That price percent oscillator still heading down on the weekly chart, waiting to see if there's going to be a weekly vertical crossover going up at some point. What do we see on the 2-day? Of course, it crossed over going up back on Thursday, the 24th. We have a red, an open box red up candle, which means a slowdown in the up movement, tracking right along that 2-day trend line. Derivative oscillator gaining upward momentum. Price percent oscillator slowly pulling away from the red signal line. We saw up movement in the morning, pairing off in the afternoon, still up for the day, 0.12%. So what are we waiting for on bonds? To see if indeed bonds are going to soar if stocks move down by crossing over going up on that weekly chart. Hasn't happened yet. Don't know if and when it's going to happen. We could have the 2-day rollover and head down. If we have a 2-day recross going down, we'll let you know that too. Again, bonds really just been sort of sliding sideways over, we can look at this, over what? 4 weeks now, going into the 4th week after some strong down moves. So we'll let the charts lead us. Lastly, we go to gold. Gold up for the day, 0.84%. Now we had that weekly vertical crossover back on the week ending the 11th of September. The following week, it slid sideways like we're seeing happen now, sideways and up with both the S&P 500 and the Nasdaq 100. And then we had last week a hammer down. This week, we see a red down candle forming, but not hitting a lower low. We see the price percent oscillator, which was really rocketing down, losing some of that downward momentum, but that derivative oscillator, our leading indicator, still heading down. 2-day chart, we can see where, again, the down movement has slowed on the price percent oscillator. We have a green up candle forming, pushing through that 2-day trend line. Now, it's not finished forming yet. We'll see what happens on Wednesday. And we see the derivative oscillator gaining downward momentum. Lastly, we go to the half-day chart. What do we see? We see where gold bottomed. Looks like it bottomed the low, 173.77 back on Thursday, the 24th. That was indeed the low. Slid sideways and then up for the last 2 days, pushing through that 2-day trend line on the half-day chart. We need to go ahead and redraw our half-day trend line. Make sure that's moving in the right direction now that it has crossed over. Can we connect 3 candles? Close, but no cigar. Okay, that's where we are. We'll continue to watch, track, and let the charts lead us to success. I hope that you're doing all these practice trades. I hope you're filling out your daily market worksheets. When you have trades, I hope you're filling out the practice trade worksheet. And I hope you are learning. That is what this is all about. And as President Coolidge told us, you got to stick with it. You want to stick with it. Persistence, 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 persistence. It is the most lacking of all virtues. And as President Coolidge told us, nothing in the world can take the place of persistence. You can do this. 10 to 15 minutes a day, that's all we ask. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.